Hi friends, in this video I'm going to talk about child support orders, which are also one kind of involuntary deductions that could be taken out of the employee's paycheck. Let's begin. So when married parents divorce or separate, or when only one of the married parents of a child has custody, the court may order the non-custodial parent, the parent with whom the child does not live, to pay a certain portion of his or her income as child support. In most states, a child is legally entitled to receive financial support from his or her parents from birth until the age of 18. Child support court orders are the methods through which the court sets the terms of the child support situation and the basis upon which an enforcement or collection action can be taken against a parent who has failed to meet his or her support obligations. In legal terms, an order is a command entered by the judge, usually the family court judge in the child support cases. Child support is the amount of money a parent is ordered to pay to the support of his or her child or children when that parent does not live with them. Standardized state guidelines determine the amount of the order, and they consider the parent's income, the need of the child, and whether there are other dependents. The income withholding is a single most effective tool for collecting child support. Garnishments for the child support are different than other kinds of garnishments. You can garnish more money for child support than for other garnishments. Who sends the child support orders? You may receive an income withholding order from many entities, including the child support agency, a judge, an attorney, or a private child support agency. Anyone, including the care provider, may send the income withholding order to an employer or income withholder. So there is something called new hire reporting. New hire reporting is actually done by the employers who hire anybody, and whenever a new person is hired in the company, the employer has a responsibility to do the new hire reporting within 20 days to the SDNH, and federal employers must report the new hires to the NDNH. So, what is the purpose behind this new hire reporting? It helps the government or other agencies to locate the person. If the government wants to send any tax levies or do the wage attachments to the employee, it is easy for them to locate the person from the data that is collected by the new hire reporting. It helps with the child support cases when the parents and children are in different states. So it helps to locate the parents very quickly. It prevents or reduces fraud in public assistance programs, and it also prevents or reduces unemployment insurance and workers' compensation fraud. When the employer do the new hire reporting, he submits 7 data elements: employee name, employee social security number, employee address, employer name, employer's federal identification number, employer address, day pay for services began or began again after a separation of 60 days or less, that is the date of hire or rehire. So all that information that is provided by the employer in the new hire reporting to the government agencies, the agency can locate the parent and sends the orders of withholding to the new employer. Under the child support order, what are the maximum amounts that can be withheld? So there are some rules again. The law sets the limits on how much to withhold. Under the CCPA, the Consumer Credit Protection Act, the maximum amount that can be withheld from employee's paycheck for child support is 50% of employee's disposable earnings if the employee has a second family with fewer than 12 weeks in arrears. 55% of employee's disposable earnings if employee has a second family and the arrears are more than 12 weeks. 60% of employee's disposable earnings if employee has no second family and the arrears are fewer than 12 weeks. 65% of the employee's disposable earnings if the employee is single and the arrears are more than 12 weeks. So when we are calculating the money to be withheld from the employee's paycheck for child support, the employer must consider disposable earnings. He should know if the employee has a second family or not. And if the order says that there are arrears, then the percentage is 5% higher than normal. So normal is 50% and 60%. But if there are arrears, that 50% becomes 55 and 60% becomes 65 if the arrears are more than 12 weeks, meaning that the employee is behind more than 12 weeks in submitting the payments for child support. If the employee is supporting another family, then the percentage is 50%. If the employee is not supporting another family, then the percentage is 60%. The maximum to be withheld is 65% from the garnishments by law. You cannot withhold more than 65%. So, as you have seen on this slide, that we are talking about disposable earnings. Let's see how we calculate the disposable earnings. If you have watched my previous video that was on the federal tax levies, we were talking about the take-home pay or the net pay, and I showed you how to calculate the take-home pay. So take-home pay, for the take-home pay, we deduct all the voluntary and involuntary deductions and the mandatory tax deductions from the gross earnings, and we come to the net income, which is the take-home pay. But over here, we are talking about the disposable income, and disposable income or disposable earning is not the same as the take-home pay. When we are calculating the disposable earnings, we do not want to deduct any voluntary deductions out of our gross earnings. So what disposable earnings are calculated by subtracting all deductions that are required by law from the employee's gross earnings. Deductions required by law include withholding federal, state, and local income tax, Social Security and Medicare tax, state unemployment or disability tax, and mandated payment for state employee retirement systems. Voluntary deductions such as health and life insurance or union dues and retirement plan contributions are not subtracted from the earnings to calculate the disposable earnings. Wages that are already subject to withholding for tax levies, bankruptcy orders, or other child support withholding orders or wage garnishments are not considered deductions required by law. Therefore, they should not be subtracted from gross earnings when determining the maximum amount subject to child support withholding. However, if the tax levy or other child support withholding order has priority over the current child support withholding order, the amount required to be deducted under the order having priority must be taken into account when determining the CCPA maximum for the child support order. Let's look at one example in which we calculate the disposable earnings for child support orders. Samantha's employer received a child support order for Samantha. Calculate the disposable earnings if bi-weekly gross earnings are $2,000, federal income tax $150, state income tax is $75, and there is no local tax. Mandated retirement payments are $50. And also calculate the amount withheld for child support if she does not support a second family and has no arrears. Now, this information is important to calculate because we will set up the percentage based on this information. So she does not support a second family and she has no arrears. So what do you think will be her percentage? Let's go back and look at the tables one more time. So if she has no second family and her arrears are less than 12 weeks, her maximum withholding will be 60%. So we take the gross earnings of $2,000, we deduct all the taxes that are required by law, that is federal, state, and local. We deduct Social Security, Medicare, and we deduct the mandated payments for state employee retirement system, and we come up to the disposable earnings of $1,572. Then we calculate the 60% of 1,572 and we come up to the number $943.20. So that is the maximum amount that can be withheld from her paycheck. Usually the child support orders will give you the fixed amount that should come out. It will give you the fixed amount based on weekly paycheck, bi-weekly, semi-monthly, and monthly. So if you are paying the employee weekly, you will take that amount. If you are paying the employee bi-weekly, as is in this case, we will take the amount that is in front of the bi-weekly. We will compare this 60% of disposable earning amount and the amount that is given as a fixed amount. If the fixed amount that is given to us is bigger than the amount that we calculate as a 60% of disposable earnings, and we are unable to withhold that bigger amount. For example, the fixed amount was $1,000. We are not able to deduct the $1,000 because her 60% of the disposable earnings are only $943. So we will deduct $943.20 from her check. Let's do one more example, and in this example, the employee Samantha has a tax levy that was established prior to this child support order, and the employer is withholding $628 for that federal tax levy, and this amount of $628 was calculated based on the rules that apply for calculating the federal tax levies. But the employer has to know what percentage of disposable earnings is this $628, and he calculates and he finds out that $628 is 40% of Samantha's disposable earnings. This is the same example as we have done on the previous slide. So the gross earnings are 2,000. We deduct all the taxes, Social Security, Medicare. We deduct the mandated payments for employee retirement, and we come up to the disposable earnings of 1,572. And we know that federal tax levy is 40%. We deduct that. Now, because the maximum in her case could be 60% that we can withhold, and 40% of that 60% is already being withheld for the federal tax levy. So the percentage that is left for child support order is 20%. And we will calculate the 20% of the disposable earning, and we get the number $314.40. So we can only withhold $314.40 even if the fixed amount on the order is, for example, $600 or $500 for bi-weekly, but we can only withhold $340.40. Talking about the priority of child support order has priority over all other garnishments except the federal tax levy received before child support order was established. So if there was any federal tax levy that was received before this child support order, or if there was any other child support order that was received and established before this child support order, those will take priority. If there are any other garnishments like student loans or creditor garnishments, we will not consider them. Child support order will come first. Okay? Except for the federal tax levy and the other child support order established before this order. I also want to talk about the termination. If the child support order is still active and the employee gets terminated, he resigns. So there is a page inside the order, which is the page number 4, which you fill out and you send it back to the agency, notifying them that the person has been terminated at this date. And it is suggested that you do it as soon as you find out that the person is terminated. I just want to show you the form, how it looks. If it lets me. No. Okay, so in one of my other videos, I will try to show you the form. But for now, this is all I want to say in this video. My next video will be on creditor garnishments and bankruptcy orders. Keep watching. Thank you. Bye.